does change everything, right? So I've always said I could be 85, 90, 100 years old, and as long as my finger works to probably the quietest it's been in a really long time, which is kind of amazing because the stock market is the wildest it's been in a long time, right? So we've seen this weird divergence where the US dollar yields and the stock market have really been going up and down, and the stock market obviously going down a lot more. But at the same time, Bitcoin has really gone quiet for the past 2 weeks or so.
Yeah.
And what that tells me, by the way, when you have these quiet periods, it's like the eye of the storm. So we're going to come out of this and we're going to have a crazy move. And the question is, which way is it going to go?
Yeah, that's just it. So it's like breakout or pull back. What are we feeling?
So I think near term, I think you actually are going to see an up move. Now it's probably like 22.5 is a resistance, and then 25,000.
Okay.
I think you could get to 25. Ultimately, I still think we have downside to go. I don't think by any stretch, think about it like this. This is the first bear market where Bitcoin doesn't have Fed printing money.
Yeah.
And so it would be really weird for it to not go down as much as past cycles. So it's got to probably at least do that. And I do worry that it could even go down more than 80 days. Yeah. So, I mean, it's been wild, right? So last year I was at this conference, and you're right. So I remember doing talks in front of groups of people and going over charting. And I kept on saying, everything in the charts are telling me that Bitcoin's topping out here. And it was 65,000 at the time. And I still remember the reaction to some of the crowds. You'd have 100, 200, 300 people listening. And it was just like this weird hush silence. Like everyone was so bullish at the time. And so when I said stuff like that, I think they kind of were like, oh my goodness, like I don't even want to look at him. He's like a pariah, But the charts are the charts. And this is the amazing thing about it is it doesn't matter if it's crude oil. It doesn't matter if it's a stock like Apple or Bitcoin. The charts will tell you the highest probability kind of issue or where it's going to go. And you just have to go with it because you're not going to be right 100% of the time. No one is. But if you can be right 70 or 80% of the time, you are golden.
Exactly. And I mean, you're talking about a pullback.
12K by end of year, early 2023, first quarter of 2023.
Yeah.
And then from there, it's going to be the big test because at that point, you're down 80 to 85%, which matches past cycles. And a lot's going to have to do with what's the Fed doing, how's the economy, how's the stock market, right? We know that in general, even though the last 2 weeks you're not seeing a correlation, if the stock market really takes a big leg down, I do think Bitcoin is pushed lower because people just panic and sell.
Yeah.
And so it's going to be one of those things where once we get to 12, 13, I'm going to be really zoned in and saying to myself, all right, when is the bottom? I'm going to start looking for those bottoming signals in the charts.
Yeah, I mean, I think
a little Bitcoin, but it certainly is a very minor position for where I want to be.
Yeah.
I love the idea of being in the position of not being all in because it gives you the freedom of not, number one, you sleep a lot better at night, right? And number two, you get in this situation of saying, okay, and this is the beauty of charting is like the charts predict that it should go down further, but there is always a level that if it gets above, now the charts flip to bullish. So like so many people in this industry of trading, they're very zoned into like, I think it's bearish or I think it's bullish. And their ego doesn't allow them to change their mind. Yeah. A good trader can see that and kind of, the laptop, there we go. And, and a good trader can ultimately focus in and say, okay, now is the time to switch my viewpoint, right?
Yeah.
And that's really the best thing about it is that there will be points where if it gets above a certain level, you just go bullish.
Yeah.
But until then, I got to be bearish.
So when it does hit that...
Before I start hodling, right?
Yeah.
So as a trader, I've learned the hard way that sometimes things don't hit your targets. Sometimes they go below, sometimes they don't get down to it. So for me, it's like when it's in the teens, I start to accumulate really small positions, but I start to get kind of like dipping the fingers in or the toes in the pond or something. And so, for me, 19,000, then another little bit at 16, then another 13, another 10, and I'll just keep on doing that all the way down. And I think that for the most part, that protects you. If it starts going up before it gets to my 12 to 13 target, you're involved. So the consolidation period like that we're seeing right now is number one, it really takes patience and discipline to not do anything because you'll see these little ups and downs. And most investors and traders, what you'll find is that they have a hard time sitting on their hands and not doing anything, right? They always want to be involved. It's almost like an addiction where you got to be in the trade. You got to be in bullish or bearish, in or long or short. And so for me, it's using that discipline to just say, hey, listen, wait till the chart tells me, right? So I'm looking for key indicators within that chart. It could be a bottoming tail, it could be a bear flag, it could be a time count. And these are the things that you look for. And then when it breaks one way, you start to say, okay, in this environment, number one, the dollar has rallied like 20% this year.
Yeah.
And gold, I think at the lows was down like 7%.
Yeah.
And again, it's so important for people to understand that if you're looking at something like gold and the dollar's up 20, you should see gold down 20%. So even though it's down, it doesn't mean it's a bad thing, because it's showing you that there's relative strength. It means that there's accumulation. So when I see gold down 7% on the year, I'm saying, wait a minute, it should be down 20, so why isn't it? And the answer is smart money's accumulating, right? And right away, as soon as I see smart money accumulating, I'm like, all right, now that's where I want to be.
Yeah.
So right away, we just saw a pullback recently in the dollar, and gold ripped to the upside. And so again, that's an indicator that, like, all right, look at the size of that move relative to 1 or 2% pullback in the dollar. Again, it went up like 4% or 3%. And so you see this kind of positive divergence developing, and that just tells me that at some point, gold is going to absolutely take off to the upside, go back to the highs of, I think it was around 2075, and actually break a lot. Isn't that crazy, right? So last year at this conference,
Yeah.
people were like, you got to buy Bitcoin. It's going to go to 100,000 by next month, then 500, because the dollar is going to be worthless.
Yeah.
And then here we are. I mean, think about the irony of that. Like, here we are, and the dollar is that's what everyone should have
This
been
is
in,
it.
is the U.S. dollar. It's gained the most strength.
Yeah.
So, it's one of those things where I do believe that long-term the dollar is headed down, and there's no doubt that the Fed will eventually be forced to print again.
Yeah.
But we have to all respect the fact that the dollar is still king of the block, right? When you look at the euro and the yen and the pound, it's still looked at as being the strongest one. So you have to respect that in the near term. Doesn't mean in the long term it's not going to lose value, but investors and traders are very focused on, they think things are going to happen too quickly.
Yeah.
And it just takes time. I mean, you can't see a reserve currency like in a year go from being the reserve currency of the world to being like zero,
So
number one, the Fed is tightening, right? So as the Fed raises interest rates, it sucks liquidity out of the system. So it takes dollars away. So just looking at a standard like supply-demand curve, if you take away some of the supply, demand, the price naturally has to rise. And I think that's what we've seen. And then if you look at it like, well, now we see the Russia invasion of Ukraine causing instability in Europe and potential recessions and all these other things. So you're even seeing like the Bank of England starting to get involved in the pound and get involved with monetary policy. And what that does is it weakens those currencies, which naturally strengthens the dollar, right? So there's a bunch of cross currents that are all lifting the dollar up.
Yeah.
I think eventually it's going to reverse, but there's no doubt that the dollar's been the place to be, right?
Yeah. So it's clear